Welcome back to another video, guys. Today I want to talk about 5 things you need to know before you invest in cryptocurrencies. A lot of talk about Bitcoin these days and the prices and should you invest, and there's a lot of good advice, bad advice, mostly bad advice out there. So I wanted to break down this video into 5 sections. Number 1, what is cryptocurrency? Number 2, what are the 3 most famous cryptocurrencies and what are their differences? Number 3, what is Elon Musk doing with cryptocurrencies? And number 4, how can I actually buy cryptocurrencies? And number 5, we're going to end off with to buy or not to buy. Before I go into any more detail, I want to stress that Bitcoin and all other cryptocurrencies are highly speculative assets. Nobody really knows how to value them, and we'll get to that at the end of the video. But if you do end up investing in any of these cryptocurrencies, you should be prepared to lose most, if not all, of your investment. So number 1, what is cryptocurrency? A cryptocurrency is essentially a digital asset which is used as a medium of exchange, hence the term currency. That's where the currency comes. The crypto part of it refers to cryptography used to secure those transaction records. The transaction records are stored in a distributed ledger and secured using cryptography. Now, if all of this sounds a little bit confusing, it's kind of supposed to. Even the experts do not know exactly what the implications and what the future is for Bitcoin or any other cryptocurrencies. A little bit of history regarding Bitcoin, the first ever and the most popular cryptocurrency. It was launched in around 2009 after the financial crisis, when people kind of lost faith in the financial system. As we know, the 2008 financial crisis that occurred in the US was largely a result of mismanaged risk procedures in financial institutions, particularly with regard to mortgages. So over time, people lost faith in the banking system and the ability of central banks and the government to sort of look after us and maintain the monetary system. In 2009, Bitcoin was launched, the white paper came out, and ever since then people have been sort of investing in it, but it wasn't popular at the very start. Unlike fiat currency, which is essentially dollars, paper notes that we use in our transactions, currencies as we know it, Bitcoin is created, stored, and sort of transmitted in this secure distributed ledger that exists in this thing called the blockchain. There's a lot of buzzwords that's flying around right now, but I want to get to the crux of it. Bitcoin's value has fluctuated quite a bit since inception. We saw Bitcoin's price skyrocket up to around 20,000 in 2017, and then halve after that. Most recently, it touched that 50,000 level in February, and it's come down a little bit now. I looked yesterday, it was up 11% at around 49,000. The volatility of this asset class, how much it moves up and down, is striking to me when you compare it to more traditional investments, and we'll get to that. According to CoinDesk, the value of Bitcoin has risen about 65% year to date. So if you bought $1,000 in Bitcoin a year ago, you'd have around $1,650 today. The allure of Bitcoin is this very fact. Oftentimes we look back and we wonder, oh, what if I invested a year ago? In fact, the first person that ever bought something using Bitcoin bought 2 pizzas for 10,000 Bitcoin in 2010, in May 2010. If the pizza owner held on to those 10,000 Bitcoin, that would be valued at around 463 million today, which is absolutely astonishing. So we look back and we wonder, should I have invested a year ago? I should have invested 10 years ago? I should have invested 7 years ago? Let me invest now. But this is a dangerous sort of fallacy to fall under. Sometimes you might have already missed the run and the upside potential of the asset might be limited. So enough about the history of Bitcoin. I want to talk about the other cryptocurrencies out there. There's a lot of cryptocurrencies I want to exclude from this video, like Dogecoin and other meme coins, simply because I don't understand them and I don't think they have any fundamental value to them. I want to talk about the coins which I think have real value and are the 3 biggest in the cryptocurrency space. That does not mean that it's priced correctly. I believe there is some value to it, but the price is a different story. So whether you should invest or not is a different story. But I think that there is some value to it. Number 1, Bitcoin, we've already spoken about it. It's a currency that's decentralized. It's not printed by a central bank. So it's unregulated in nature. There's nobody, checking your transactions. It's a distributed ledger which is shared, and it's much more secure than fiat currency. Again, much more secure than currency. There's a lot of concern about criminal activity and things like that happen on Bitcoin, but that's a discussion for a separate video. Overall, Bitcoin's purpose is to have an unregulated global uniform currency that we can use to facilitate transactions and not have someone in charge of creating and distributing and managing that money supply. It's a way for some people to gain back monetary power into the hands of the people. Number 2, Ethereum is a little bit different actually. If Bitcoin is cryptocurrency 1.0, Ethereum is cryptocurrency 2.0. It's the next level. Ethereum is a decentralized software platform which allows people to build decentralized apps and smart contracts on it, DApps as they call it. So while Bitcoin is just a currency, Ethereum is a ledger technology that people can use to build decentralized applications on. Number 3, Ripple. Ripple is a payment settling currency exchange and remittance network. And the actual currency, the actual cryptocurrency in Ripple, in this system, in this network of payment settlement, is XRP. XRP, the actual cryptocurrency in Ripple, is the token that's used to actually facilitate these transfers of money. Existing settlement systems currently use US dollars as a common currency when they facilitate the transfer of money between countries. This is why when you make a transfer abroad, it often takes around 3 days for that to happen, because the transfer is using the US dollar as a common currency to transfer and transfer back. This incurs exchange rate costs, it takes time. There's a lot of issues with this process. Ripple comes in to solve this. That's the purpose of it. Instead of converting to US dollars and using USD as a base currency, the Ripple platform uses XRP, its token. Ripple converts that transfer into XRP rather than US dollars and then converts it to the desired currency. This cuts out the currency exchange costs, and it's far faster than the existing settlement networks using USD as their base currency. Thus, you can kind of see that all these cryptocurrencies have some kind of purpose, some kind of mission they're going after. Bitcoin wants to create an unregulated, unencumbered medium of exchange universal to everyone. Ethereum wants to facilitate the building of decentralized applications, and Ripple wants to cut currency exchange fees and reduce the time that it takes to actually transfer money. So there's a bunch of cryptocurrencies out there. There's good ones, there's bad ones. Bad ones are ones that really you can't see the value in, and good ones are something that you actually believe in. In fact, I have some relatives that invest in sort of smaller cryptocurrencies, which they really understand. They've done the research and they see that the world has a need for it, and thus they've invested. When I hear about some of these investments, I realize I haven't even heard of these cryptocurrencies, but the people in the know seem to know. Thus, I won't make a blanket statement on cryptocurrencies as a whole. I believe that if there's something you believe in and you've done your research, then you should go for it. And that should be your investment process in any kind of investment. But make sure that you look at things like price as well, whether it's overpriced. I have met some people that have blindly put money into cryptocurrency and lost money, and I have met some people that have put money with a very long-term horizon. Over the next 10 years, I expect to make money. I've met both groups of people, and the second approach, having that long-term horizon, investing in something you believe in over the long term, and you've done your research, you assess the price, that's always the right way to go. Number 3, why is Elon Musk buying Bitcoin? So Elon Musk's Tesla recently took a $1.5 billion position. They bought up, that's around 7% of their cash holdings in Tesla, of Bitcoin. They bought it up. A lot of people in the crypto space think this is a huge step forward, and I do too. But there's still a small piece of the puzzle missing for me. Investing $1.5 billion in Bitcoin and accepting Bitcoin as a form of payment for your products is completely different. Elon Musk has said that he will consider, and the company will consider, accepting it as a payment form, but it's not done yet. When Tesla, Apple, and all these companies start accepting Bitcoin and other cryptocurrencies as a form of payment, now that is a big step forward. Because right now, if you can't go and buy a Tesla using Bitcoin, that means that Elon Musk still isn't sure about the long-term value of Bitcoin, because it could halve tomorrow. So imagine Elon Musk accepted X amount of Bitcoin for a car, and then it halves tomorrow in value. Suddenly you've lost money. So until companies are willing to accept Bitcoin as a form of payment, it's not a legit currency. I've also heard of football players and other athletes receiving salaries in Bitcoin. But even here, there's a small component that's not really looked into. The football club or the firm, the organization is not agreeing to pay you 1,000 Bitcoin, for example. That's not what they're doing. They're agreeing to pay you 1 million, saying we'll pay you $1 million, but before you pay it, we'll convert it to Bitcoin and give it to you. The slight difference here is that if they agree to pay 1,000 Bitcoin, then they're taking that volatility risk among themselves. If 1,000 Bitcoin rises 100% tomorrow, suddenly they have to pay the athletes so much more. And because of that reason, they agree to pay a monetary value converted in Bitcoin. See, that slight difference is what makes Bitcoin different from a currency. And until that changes, until companies are willing to accept payments in Bitcoin, and until companies are willing to pay their employees in Bitcoin, until Bitcoin is actually used commonly as a form of a medium of exchange, it's very difficult to accept it as a legitimate currency. But that doesn't mean you can't make money off Bitcoin as an investment or a speculative investment or a trade. People have and people are, but whether the price is right is a different story, but it's possible. Which leads me on to my fourth point for the video, is how can I actually buy Bitcoin? So the first thing you need to know before you actually go out and buy Bitcoin is, just like real money, you need a wallet. And there's two types of wallets. There's software wallets and hardware wallets. Software wallets are like mobile applications, and we'll talk about a few. Hardware wallets are real life tangible wallets, which are more secure as you could imagine, but not as convenient. For software wallets, we can talk about a few mobile applications. The most popular and the most common one is Coinbase, an app that you can download on your phone. And it's relatively straightforward to set up. I expect to sort of have some images somewhere around where I sort of show some of the setup process, but essentially it's you entering your details, your bank details, your name, your address, and things like that. The second step is to connect it with a bank account and a debit or credit card. After you've selected your software wallet, it could be Coinbase, Kraken, Binance, all these alternatives out there. Once you've selected your platform, you register, you submit some documents, you get verified, and then you connect it to your bank account and valid credit or debit card to facilitate those payments that you make when you buy or sell Bitcoin or any other cryptocurrency for that matter. You can buy anything there. It's a currency exchange. Just like a forex exchange, it's a cryptocurrency exchange. So it's really as simple as that. You download the app on your phone, you register in, and you connect it to your bank account, and you're good to go. That's really the beauty of the investment landscape today. As an individual investor, you can do everything yourself now. When I was first starting out in investments, I remember I had to do everything through a broker. I had to contact someone, go and meet them, discuss it with them, and then they would be the ones that actually invested it. Right now, you can do everything yourself. But this is where the risk component also comes. There's a lot of people using apps like Robinhood, investing in things that they don't understand and taking unnecessary risks and putting themselves into bad positions. Which is why before you do anything, you should always research, not take anything that I say or anyone else on the internet says as investment advice. You should do your own research. You should invest in things that you believe are fundamentally valuable and could rise in price in the future. And that brings me to my fifth and last point: to buy or not to buy. For me, the price is just too high when you take something like Bitcoin to jump in right now. But there are opportunities everywhere. You know, I hear a lot of people talking about NFTs, non-fungible tokens, stacks and other things in this space. You should always keep your eye out for new investments, but you should be conscious of the price. I know how to value a company. You take the cash flows of the company, you look at the dividends, you get money from the company. The company has actual tangible value which you can measure. I know how to value a bond. A bond will give out periodic coupon payments until maturity, and then you get the principal at maturity. Those cash flows that those assets that I mentioned have are extremely important to value in an asset. Unfortunately, Bitcoin as an asset can't be valued. It's always going to be the amount that people are willing to pay for it. And right now there's this FOMO, the fear of missing out. There's so many people just jumping in to buy Bitcoin, but at one point it becomes so expensive, and this is what happens in most bubbles. When people start realizing this is actually too expensive for what it is, that's when people start selling, and that's when the price falls. But it's okay if you disagree with my view on this. Disagreement is what makes markets work. Because if you think about it, you need a buyer and a seller for a transaction to happen. If I'm buying Bitcoin, I need someone who's willing to sell Bitcoin to me, right? So if I am pessimistic on the price of Bitcoin and the value of Bitcoin, then there has to be someone who's optimistic to buy it on the other side. That two-way transaction, for that to even happen, disagreement needs to happen. So I'm completely fine if any of you in the audience disagree with my views on Bitcoin, and I'm happy to hear about them. So I think disagreement, especially when it comes to financial markets, is completely healthy. In fact, a lot of funds make money on this contrarian investment strategy where they invest in the opposite of what the consensus of what people in general believe. But my view on it is that usually when you start hearing about investment through TV and through celebrities and all these things, it's usually the wrong time to buy. It's usually the time when everyone's buying in and it's possibly at a peak. But for the case of value, I want to be as unbiased as possible. There are two sort of driving factors that drive the value of Bitcoin. The first is that there's limited supply. It's programmed to only have 21 million Bitcoins in supply ever. That's the absolute cap. And right now there's around 19 million already issued. The basic rules of supply and demand, you don't need to have done an economics degree like I did to understand that if supply is so limited and people are still willing to buy, that the price will only rise. And the mechanism for this in practice is that if you have, like, say 10 Bitcoin and suddenly there's no more Bitcoin that could ever be issued and someone really wants Bitcoin, they will be willing to pay a higher price to you. So this limited supply of Bitcoin, as opposed to say fiat currency, you always know that central banks can print more and more and more. And that's why, and that's also a sort of stark contrast between Bitcoin and other currencies. The limited nature of its supply means that at one point it's going to run out and you will have to buy it from somebody else if you want it. It's the demand side that I'm skeptical about. I completely agree with the supply. I just don't believe that the demand is sustainable. And that's the issue here. So the first point of value is the limited supply. The second point of value is the institutional interest. For a long time, it was just people on the internet, people, fans of cryptocurrencies that bought Bitcoin, and institutional interest, these big, large funds, they never put money into Bitcoin. But now, this year and towards the end of last year, these big funds who manage, large pensions and things like that, they've actually started buying up cryptocurrencies. And this is a sign of confidence. If the professionals are willing to put their money into cryptocurrencies, then that shows that there's some kind of stability that the markets overall believe. But keep in mind that these funds, they don't go ahead and put 100% of their money in cryptocurrency. They put a small percentage usually to, just in case that volatility hits their fund and the price tanks, that they would still be okay. And that should be your style of investment too. You should never put all of your money or most of your money into one thing, especially when it comes to speculative assets that you haven't really priced methodically and scientifically, but you rather just believe in something. Now, one thing that comes up, and at the expense of making this video a little bit longer, I do want to address it. What about the comparison to precious metals like gold and silver? Isn't Bitcoin similar to that? Because I said that, stocks can be valued because of underlying cash flows, bonds can be valued because of underlying cash flows, gold, silver, they don't have underlying cash flows. So why do we as humans still value that? And how is cryptocurrency any different to that? This is something that's tricky, but gold, people have been, attaching value to that for thousands of years. And we've been using that to make stuff and we recognize its value. Cryptocurrency and things like Bitcoin are so relatively new. My issue is that what's to stop a new type of cryptocurrency coming and say replacing Bitcoin, taking all of Bitcoin's functionality and doing better, in the same way that Ethereum is like a step up, where you have a ledger where you can make decentralized apps. What's to say that Bitcoin would be the number one cryptocurrency forever? We never know that. So because of that, Bitcoin is a risky asset. It could be replaced. We just don't know yet. And the other issue that I have with comparing it to gold is that people invest in gold in times of sort of volatility and in times of recession, and when people believe that the economy is going to fall. It's a safe haven asset. It's sort of a hedge against the fall of a dollar, for example. Gold is a safe haven asset, but cryptocurrencies like Bitcoin are certainly not safe haven assets. And there's a bunch of studies that show this, that Bitcoin certainly does not trade like a safe haven asset, it trades like a risky asset. But put aside all that and think, if you were to use Bitcoin as a stable currency, would it work? Is it feasible? It's not that uncommon for Bitcoin's price to go up 5%, go down 5%. I already said, yesterday I looked at it and it was up 11%. So is it really feasible for you to buy a house with Bitcoin, or to buy coffee, or literally anything, groceries, your everyday items using Bitcoin? Imagine you went to the store to buy a sofa using Bitcoin and suddenly the price has fallen 10% since the morning, and now you have to pay so much more money to buy your sofa. That's the fundamental issue when it comes to Bitcoin. The volatility is too high for it to be considered a stable currency. So for these reasons, it's difficult for me to look at it like a long-term investment. And for me, my opinion is that the price is just a little bit too high right now. But a lot of people do disagree with me, and I believe that that disagreement is vital for the efficient functioning of financial markets as a whole. As always, none of this is investment advice. You should always do your own research before you jump in. Whether you sell, whether you buy, whether you make no decision at all, always make an informed opinion based on your own research. Thanks so much for watching, guys. I hope you found this video informative. I'll drop a link in the description to the Maversify Instagram page where I'll be interacting with the community and you guys get to decide which videos come out next. I'm thinking of starting an additional video series on how to secure a job in the UK as an international student. All of this is free content, none of it will be paid. If you guys are interested in these kind of content, do let me know, and that would sort of encourage me to explore further avenues of videos too. Well, that's it for today, guys. Hope this has been informative, and I'll see you in the next video.